All right, what's going on YouTube? This is going to be my first video on the channel, so I'm actually really stoked to be sharing this this strategy with you. This is going to be a combination of a strategy video as well as just how I have been able to cut through all of the BS online and figure out for myself what works the best as far as strategy goes, as far as what works the best for me, and how to verify that using AI and using back-tested data. So first thing, I want to quickly go over my strategy. So I trade ICT concepts. I've been trading ICT concepts for a couple of years now. I've done a lot of strategy hopping over the years. I'm going on to my. I started trading in November of 2019, so it's 2026 now, and it's been, man, almost 7 years. This fall will be 7 years since I started learning how to trade, and it has been a absolute roller coaster, and it's been awesome. I mean, it's been really fun. I've had some extreme lows, extreme highs throughout all of it, and I'm just grateful that I'm still here and I'm still trying. So, whatever you do, don't give up. Okay. So I want to talk a little bit about my strategy because this strategy has been something that I personally love myself. I love to have around a 1 to 3 risk to reward. It just works the best for my psychology. My trade management style works the best for my psychology. So I'll quickly go over everything. So if you're not familiar with ICT concepts, this might be a little bit confusing for you, but hopefully I'll try to put this into layman's terms as best I can so that you can follow along and hopefully get some value out of this, even if you don't trade ICT concepts. So, okay, here we go. So, real quick, right off the bat, this is today's price action. This is March 5th. This is Thursday, March 5th, 2026. And this might look really messy to the average person, but for me, I see everything very clearly. Okay. If I zoom in a little bit, well, the 1 minute is on my right hand side, the 5 minutes on my left hand side. Just give you some context as to what happened today. So I trade the 4 hour candle that opens at 10 a.m. EST. And I will monitor the charts for basically anywhere from 2 to 3 hours after that candle opens. My cutoff time is 3 hours after that candle opens. I don't trade the last hour of the candle because there tends to be a lot of manipulation and BS that happens in that last hour. Won't get into the details of it, but this is the indicator I'm using right here. This shows me the 4 hour candle that's currently open. This is called Lux Algo Higher Time Frame PO3. Here's my settings: 4 hour, 2 candles, 20 bars offset, and just set it to whatever color you want. And yeah, that's pretty much it. It's very simple settings. There's nothing else. I don't use any other indicators. I don't use any fair value gap highlighters. I don't use any signal tools to tell me when to enter. All I'm doing, just here, I'll quickly remove everything so you can see how I'll remove everything except my actual trade setups from today. So what I do is I will wait until that 10 a.m. candle to open, which in this case, just move myself there, which in this case is, I got way too many bars down here. Oh my goodness, now I can't see the time. Okay, there we go. All right. So I'm on MST, so this is 8 a.m. So this candle right there is the candle that closed, and then this was the first 15-minute candle that opened for that new 4 hour candle, right? So what I do is I look at the color of that 4 hour candle as a filter to give me my bias. I also look at the context of the previous candle. So this previous candle did close bullish with no top wick. So I anticipated price sweeping the top of this candle to then potentially look to reverse and dump on us, which is exactly what it did. So when this candle does dump on us and opens up bearish in this case, what will happen is on the 15-minute time frame, we will get fair value gaps that are formed right there. So within this bearish fair value gap right here, just zoom in so you can see this. Within this bearish fair value gap, I am looking for a entry opportunity to continue going short, which is in line with the higher time frame candle, that 4-hour bearish candle, right? And that's exactly what happened here. Now, to refine my entry area further, what I'm going to be doing is I'm going to be going to the 5-minute, and I'm going to be marking my Fibonacci up from the top of that leg to the bottom of that leg right there. So you see how I went from the top of this bullish candle to the bottom of that bearish candle's wick. Okay. And if you want to look at my settings, there are my Fibonacci settings. Nothing too fancy about it. There are only 3 levels I care about within the Fibonacci. I care about the 236, I care about equilibrium or the 50, and I care about the 705. The 705 is such a beautiful level that gets respected all the time, especially on NASDAQ and S&P. And so this is something that I always pay attention to when I'm looking to enter these trades. So here's my thought process. I'll just show you this on the 5-minute, and then I'll switch over to the 1-minute so you can see how this looks on the 1-minute time frame. I'm just going to keep it on the 5-minute on the left-hand side and go over to this 1-minute chart so you can see what happened. So on the 1-minute time frame, price came down and then came back up and was starting to tap equilibrium, and then finally tapped into my higher time frame 15-minute bearish fair value gap. Now, when I saw this bullish fair value gap on the 1-minute inverse, we got an inverse fair value gap here. I then waited, because one thing that typically happens is if you have these double tops form, like if you don't get a V-shaped recovery out of a higher time frame gap, chances are price will manipulate higher to do an internal liquidity sweep before reversing on you to go lower. So it'll actually stop you out and then continue in your favor, which is a real piss off, believe me. So in this case, I waited for a CISD, which is this low right here. We got the CISD off of this candle, which came back and actually retested that CISD before continuing lower. And if you look at this trade, it's a beautiful trade. Like, it's textbook for my strategy, but I lost this trade. Why? Because my trade management rules dictate that when I enter a trade, in this situation, if I have a CISD in combination with an IFVG, an inverse fair value gap, my stop is going to go above that inverse fair value gap if I'm entering off of that CISD, and I'm going to be targeting, in this case, we're rejecting off of the 50% extension, equilibrium. Based on my backtesting data, I'm targeting, in this case, the 0 level on the fib or sell side liquidity. Okay. Now this sucks. Today was more of a seek and destroy. What I like to call seek and destroy market conditions, right? So when you have price come all the way back up, take out buy side liquidity, followed by taking out sell side liquidity. That's textbooks seek and destroy. And I recommend that if you're a beginner trader, don't even try trading this, because it's going to mess you up mentally and make you think you're going crazy. Okay. But if you've backtested this and you have a lot of screen time and a lot of just time that you've spent on the charts, then by all means, be patient, wait for the right entry confirmations, enter the trade, and follow your trade management rules, whatever that might be. So my trade management rules are essentially when price gives me that CISD, I am entering, putting stops above that IFVG, targeting sell side liquidity in this case, or the recent swing low, which is the 0 level. Okay. This trade came all the way back up and stopped me out, and I lost $3,000, which sucks. Okay. Absolutely sucks. But it's in line with my plan, and within my trade management rules, I have one more opportunity to re-enter this trade, or just re-enter on the same day within that 3-hour window that I trade from 10 a.m. EST to 1 p.m. EST. I have two opportunities. I have two opportunities to enter these trades. So if I get stopped out the first time, I have one chance to re-enter. Okay, just want to be clear on that. Now, if I'm looking at this here, After I got stopped out, I'm potentially looking for a textbook setup for a reentry, which is exactly what we got. We had price come all the way back up and tap the 705, again delivering out of that higher time frame, 15-minute fair value gap, which is this gray zone, and then gave me this 1-minute IFVG right here, which I entered because I just saw the momentum that price was moving at. So I kind of front ran it a little bit, and I entered it, put stops above that swing high, and I targeted the 236. My actual target was the 236, but I had one runner that I brought down to there. Okay, and that was the trade that ended up allowing me to pass this FTMO trial, which I'll show you in just a second. But before I do that, I just want to finish explaining this. So my rules dictate that if we're delivering off of a 705 level, I'm targeting the 236. If we're delivering off of equilibrium or the 50 extension level, I'm targeting 0 level or sell side liquidity. If we are delivering off of the 236 level, I am targeting the 27 extension. All of these levels have to have higher time frame fair value gaps to be in line with them in order for it to be valid and a key level that I'm interested in potentially entering around. Okay, that's the first thing that provides the context of the areas I'm going to be interested in. The second thing are my entry triggers. So I have 3 different versions of trade setups with entry triggers. Okay, so this is the first one here. It's just a standard IFVG delivering off of a Fibonacci level within a higher time frame gap. And you can see that played out beautifully. So when I have this happen, I'm entering off of the inverse of that fair value gap with stops above. Now, because there's no CISD in this situation, my stop is not sitting just above that inverse fair value gap. It's sitting above the swing high in this situation. If we had only a CISD or only an inverse fair value gap, and there are examples of this that I'm going to share with you in the link in the description, which shows you all the trade data from 118 trades over 6 months within 2024. There's 117 examples of this so you can look at. Within this example, if it's only an IFVG or it's only a CISD, then I'm putting my stop above the recent swing high or recent swing low. Okay, if I get both an IFVG and a CISD, and this usually happens with the same candle. So for example, right here, this candle was responsible for inversing that fair value gap. This candle is responsible for giving me the CISD. Sometimes that candle will be the same candle. In this case, it's 2 different candles, but sometimes it's the same candle. That tells me that there is really good momentum and I have a higher probability that that trade is going to play out. Okay. That allows me to have a bit of a tighter stop, which then allows me to have a higher risk to reward. Okay. And my target is dictated based on the level we're delivering out of. So in this case, we're delivering out of the 50%, which is equilibrium. I'm just targeting the swing low where sell side liquidity is sitting. Okay. Now, that's the trade. That's the whole trading strategy in a nutshell. And I'll give you some more additional context because I'm sure you'll have questions in the comments I'll have to respond to. I do not trade FOMC days. I do not trade any day that the Fed chairman is speaking. So it was Powell. Now it's a new guy. I don't know his name off the top of my head. I don't trade any day that the president is speaking. And I also typically don't like trading these kinds of days, which are seek and destroy price action, where we take out external buy side liquidity followed by taking out a sell side liquidity, right? So you get that big V shape within, a couple, I would say, within the first hour of open, you're going to see that big V shape, which is going to have you stuck in this BS price action that most people are going to get absolutely screwed on. So as long as you know how to trade based on market conditions, it's okay if you trade these days. You just have to be patient with yourself and you have to be very disciplined to follow your rules. Okay. So now that I've broken down when I trade, when I don't trade, and a little bit about my trading strategy, I want to talk about backtest data. All right. So this is the exact strategy I just showed you, but in data with 118 trades. And I'm going to share the actual link so that you guys can um, look at this data yourself. You can comb over it with a fine tooth comb and do with this whatever you want. But I'm not giving you this data to take this and run with it. That's not the point of this video. The point of this video is I want to show you why I have gone from a break-even trader to a profitable trader simply by collecting data. And I know people harp on this stuff, but it's like, how do you collect data? What do you do with that data? How do you make decisions off of that data? What does that even look like? Well, I want to show you right now. Okay. So in this data that I'm going to be reviewing with you, there is the ability to download this data into a CSV file. A CSV file is basically an Excel spreadsheet. Okay. You click on this download button right here. It'll download. It'll be called analytics or whatever. And you don't need to have a Microsoft Excel spreadsheet subscription to use this data. You're not even going to be opening the spreadsheet yourself. What you are going to be doing is taking this data, putting it into ChatGPT, and having ChatGPT identify common themes, or not even common themes, but basically it's going to cross-reference the data to determine which confluences are going to provide you with the highest probability in terms of like an A plus setup, what that actually looks like for your trading strategy. Okay. So this is, I have to show you how to backtest this in order to explain this further. So if I go to my sessions and I just go to session analytics, okay, I was just on session analytics. If you go to sessions and then I go to chart, okay. Let's just go to dashboard. I don't know why it's, let me just refresh this. Okay, dashboard. I keep pressing the wrong button. Sessions, okay, go to chart. If it'll behave now, that'd be great. All right, so I'm not going to go, well, we could do one day. Let's backtest one day together so I can explain this in depth. And why the hell is this so friggin' slow? I swear FX replay is so temperamental, and yeah. Let me try refreshing again. I don't know why this isn't loading. All right, decides to work now. Here we go. Okay, so the cool thing about my indicator, which is the higher time frame PO3 indicator, it also works on FX replay. They added a whole bunch of indicators recently. Highly recommend that you go pay for this subscription. And if you're not profitable or you're break even, this is where you should be. If you're not forward testing, you need to be back testing. That is just as simple as it needs to be, okay? All right, so let's go to the, yeah, it's just going to be called PO3 Pro Plus or whatever. It's got the same, very similar settings. Again, 4-hour time frame. I have 4-hour time frame candles selected. You can pause the video and look at these settings if you want, but it's essentially the same idea. So, like I said, I don't trade until 8 a.m. MST or 10 a.m. EST. So let me just make sure I'm on the right time frame. Yep. Let's go ahead and go forward here. There's also news, which is, oh, so right here, Fed Chair Powell's speech. I don't trade on days that Powell's speaking. So let's go to next day open. What's this? ISM services, PMI. Yeah, that's fine. Okay, so again, we're at 644. And I think there might have been daylight savings. Actually, no, this is July. Let me just double check my settings. I don't want to accidentally backtest the wrong 7 a.m. 8:45. Yeah, I have 8:45 selected, but it's going to be 2 hours. All right. Well, let's see. What does this say? Yeah. Okay. For some reason, it's got me going an hour back now. So this is 10 a.m. EST. ISM services is always released at 10 a.m. EST. So I can go to my settings here, and I'm just going to adjust this to be 1 hour forward, 9:45, and just save that. Okay. So let's just go ahead and zoom past, and if we see a reaction at 7, there we go. 7:30 open, so this is the market open. I don't care what happens between 7:30 and 8 a.m. MST. 7:55, 1, 2, 3, 4, 5, boom, there's news, okay? So what I'm doing, I'm going to the 15-minute time frame. I'm looking at the context of the 4-hour candles, and overall, we are very bullish, right? We've also swept a recent high over here, but again, you can just focus on this. Overall, we are bullish. We have this big rejection wick on the previous 4-hour. This candle here, with this big bearish looking candle, is the one that just opened, okay? What do we see here? We see where's my, oh my gosh, everything just has to be over top of everything, doesn't it? My goodness, dude. All right. We see a fair value gap right here to continue to go higher. Okay, let's go to the 5-minute time frame. We want to mark up our fib. Our fib is going from here to here. It's the same settings as the one on TradingView that I showed you. Okay, let's go 1 candle, 2 candle, 3 candle, 4 candle, 1, 2, 3. All right, so we get a tap of equilibrium. You look at the 15-minute again. Just keep going here. Let me just hit play. There we go. Okay. So when you see choppy BS like this, best thing is to just stay out, especially after news, because news creates a whole bunch of, it takes out buy side and sell side. Whether it's internal or external, doesn't matter. It's just going to sweep both sides, okay? So now what we notice here is we are respecting equilibrium multiple times, and we have yet to go take data highs, okay? On the higher time frames, 4 hours are bullish, okay? So what I'm doing is I'm just waiting to see if we get a potential inverse fair value gap right here. That is one entry. All right, and we actually get it. So this turns into a IFVG. And because this is only an inverse fair value gap, there's no CISD, we are putting our stops below. Okay, that's 16 points, so we can actually put them down there, 24 points. And because we're delivering off of equilibrium, we're just going to target data highs. Not the best risk to reward, I'll be honest. I'm actually going to adjust my stop to be below here because I want to have around a 2 risk to reward. And yeah, that's better. All right, let's go ahead and where's my go to order? Just go to order. So one cool thing about this, if you click on this and you click order, it automatically puts your entry price, stop loss, and calculates your risk. In this case, I'm risking 1%. This is the really important part. This is the whole purpose of the video I wanted to show you. When you backtest on FX Replay, click Save and Journal. This will open a journaling calendar, which you will then take a before screenshot. You will scroll down and select the necessary tags. We have a 15-minute, or excuse me, yes, we tapped into the 15-minute fair value gap right here. So I almost sketched myself out for a second. Yes, 15-minute fair value gap. We did have news today. This is a 1-minute IFVG. There's a clear draw. And let's see what else we got. This is, yeah, news was at 10 a.m. I wouldn't call this V-shape. This is a 50% level retest. No FMC, and okay. I'm going to put 5 stars, 100% confidence. Only issue is we didn't have a candle closure. I should say a 1 minute candle closure within the 15-minute bullish FVG. So that's one thing I have seen with my strategy is I want to see a candle closure like this. Typically, I have a higher win rate associated with those kinds of setups, but for the sake of the example in the video today, I'm just going to show you how I'm actually tracking all of this, okay? So we're going to go ahead and just click, 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 boom. That played out. Now I'm going to click the after screenshot, okay? So you can see in my little window here, I've got the before, I've got the after, I've got all the tags, I've got my confidence level noted, I got trade rating, I just made a quick note of anything I was thinking of. I don't have my checklist set up. I would also recommend that you set up a checklist that has, you know, the entry criteria and all of these tags mentioned. The tags are important for the CSV file. So the checklist is not mandatory for the CSV file to work with AI, but let me go ahead and click save. And you can see I got 1.97K on my calendar, and then I'm going to click X on this, and I'm going to go ahead and remove my drawings. I'm a one and done trader, so when I get one setup and that setup plays out, I'm done for the day. I'm not looking for another setup. I'm not looking to pull more out of the markets. I am done. Okay. Now that's awesome, but what do we do next? Well, like I was saying earlier, you're going to come back to the session. So you're going to go, you're going to click on analytics. You're going to go session analytics, and then you're going to take this CSV, which I just copied and pasted, or I just downloaded. Now I'm going to paste it into ChatGPT. So I'm going to open up my ChatGPT here. Let me go ahead and close that sidebar. Add files. We're going to select the file right here. Analyze this spreadsheet of my trade data and find the highest probability setup based on cross-referencing the data from the tags provided. So it's going to go ahead and think. It's going to analyze that CSV. I have a ChatGPT paid plan. It's the one up from free, so I don't know if it works with the free version, but I recommend you pay for ChatGPT because it's amazing and does a lot. But I use it multiple times a day. So while it's analyzing, I'm just going to take a minute to chill. Excuse me. All right, I'm just going to pause this and hit play when it shows up. All right, so that took like 5 minutes to analyze everything, or felt like 5 minutes, 2 minutes. So it analyzed 119 trades, overall win rate. Make sure you check this with your data to make sure it is the same. So you want to make sure it's actually analyzing the same basic data that is listed here in your backtesting. Okay, so you want to do this with a minimum of 100 trades. So it's got the same win rate, same average P&L per trade, realized P&L per trade. Then it gives me the best A+ tag combo. So anytime it's delivering out of a 15-minute fair value gap, I get a 1-minute IFVG, and I'm targeting the 27 extension. I know, based on my strategy, that targeting the 27 extension is actually delivering off of the 236 Fibonacci level to be able to target that 27 extension, okay? So you can see my average risk reward is 3.32 for that for those setups. My win rate for these kinds of setups is 90%. Most of them in this case have been long positions or buy positions. And then see again, it's just filtering it down by slightly lower win rate with a higher payout, adding that 50% level retest. It's basically the same thing. Not sure why it gave me both of those options there, but that's essentially why you want to plug this into ChatGPT and look at, okay, what are the trades with the highest likelihood of what's the highest probability setup that I can take to ultimately make, in this case, the best risk reward, right? Now these trades, there's only 10 of them in 119 examples. So I wouldn't limit yourself to only these tags. There are going to be other tags that have win rates that are lower. Obviously, my overall win rate is 50%, right? So what I can do is I can say, analyze the best setups that have at least an overall win rate of 54%, because that's my baseline. That's my baseline win rate. And it's probably going to take a couple minutes to do that as well. But this is how you can figure out for yourself if someone's full of shit online. Okay? The best thing you can do for yourself is go put time on the charts, whether you're forward testing or back testing, come up with a strategy with very specific top-down analysis, very specific entry criteria, make it make sense for yourself. Like, it logically has to make sense. If you don't understand what you're trading and why you're trading it, you're not going to feel confident to keep trading, especially during losing periods, okay? So the extension plus retest setup is the second best, has 87.5%. Again, this is the 50% level retest, which I already know. And actually, I think the example I back tested was a 50% level retest, but we weren't targeting the 27 extension. We were targeting that 0 level. So there are situations where I may have let a winner run to a 27 extension target. Like today was a really good example of that, because our 4-hour candle was extremely bearish and actually dumped all the way from the 705 level to the 27 extension level for a lot of points. It's, can see it's still running here. So like I closed around here, which I'm happy with. I'm okay with that. But if you were to take this trade all the way to 27 extension, that's 200 points. Okay, so there are instances of these examples playing all the way out to the 27 extension, but I personally don't want to be in a trade that long. I don't need these home run trades. I like these base hits. Like my base hits are around a 1 to 2, 1 to 3 R. If I'm seeing that when I mock up a trade, I know I'm within my optimal risk reward. I know that I'm already entering this trade within OTE, optimal trade entry. So I have multiple things going for me here, and I'm very happy with a 55% win rate. Doing on average, my risk reward is a 1 to 2.9, so just shy of a 1 to 3. Okay, and that's because I also take trades that are around a 1 to 2, so on the average will bring it down a little bit. But I also have trades that do go to a 1 to 4 or 1 to 5. I think my largest trade was like a 1 to 7 or 8 during back testing. So again, you got to go collect this data for yourself. You have to go figure this out for yourself. Use the tools at your disposal, like AI, to tell you when I have a CISD confirmation setup, what's my win rate look like? When I have an IFVG plus an extension involved, what does my win rate look like? Like all of these examples give me an idea of like, oh, a 1 minute CISD plus having a V-shaped recovery equates to an 80% win rate. A 15-minute for value gap, 1 minute CISD with that V-shaped recovery also gives me an 80% win rate. Like play around with ChatGPT, play around with AI to allow you to build the confidence in your data and cut out the noise. Stop listening to people on social media. Stop buying courses. Everything you need is on YouTube for free, this video included. I'm not the person you need to listen to. You don't need to use my strategy, okay? If you can't trade these hours because you got a 9 to 5, figure out how to be a swing trader. Figure out how to do things in the Asia session or whatever works for your schedule, but go back test the crap out of the strategy you want to potentially do and use. And if you're break even and you have an idea of like, my strategy works. I know my strategy works, but you don't have 100 trades back tested and you don't have things journaled like this. You don't have before and after screenshots. You're not using AI to analyze things. You're not reviewing your data. Then you are flying blind. There's a reason you are a break even trader. It's because you're not putting in the extra amount of work to go deeper on what's necessary to get you across that finish line. Okay. Anyways, this has been a long enough video. Let me know if you'd like me to go and create a video that's more in depth on my strategy, or if you'd like to see me doing some live backtesting sessions with it. Whatever the case might be, leave a comment down below and let me know what the next video should be, because this is my first video on the channel. So I wanted to try and provide as much value as I could, give you an idea of how I trade, and of course, kind of cut through the BS in this industry that's full of it. So hope you all have a great day, and take care. I'll see you.